everybody? Michael Picola back with another mortgage talk. Today we're going to talk about myths and facts of credit. People do not spend enough time talking the importance of credit. It's going to, at least in the mortgage world, make the difference between a aggressive rate of, lowest rate available, or it's going to cost you more to get into the average rate. That is something that, if you're not asking the deep questions to your loan officer, that's something you want to have a conversation with. If I do this, what will happen, or what can I do to improve? My clients, I take the time to do what if simulators and different simulators to let them know, is it worth it to get to the next level? So to do that, you got to understand, credit is based off of poor to perfect. And every 20 points, right? So 600 to 620, 620, 640, and all the way up past, 820 has a different pricing guide. So let's talk about some of the myths, right? So everybody freaks out when they say, oh, a credit pull is going to hurt your credit. You actually have 14 days when you're shopping for a mortgage before a hard pull will hurt you. If you already know everything about your credit and not sure if you want to shop around, just explain to the loan officer in which you're talking to your situation. Tell them you have your credit report in hand and you know exactly what you're working with. They should be able to get you an idea of what they are. Another myth with that is the guy down the street has a better interest rate. It's not true. They're all basically the same based off of your credit profile. Next, and this one is huge, okay? So this is one that I want you to pay attention to. If you have some credit troubles in the past, liens, judgments, collections, you need to speak with a credit professional before you pay those off. Sometimes we can get around those, meaning sometimes not paying them will be better, versus if you do pay them, they will sometimes crash your credit. Again, every situation is different, so I want you to remember that. The next myth is if I pay those judgments, liens, or collections, they disappear from my credit. That's not true too. Your credit holds on to everything you've done for a minimum of 7 to 10 years. Once those fall off after the 7 to 10 years, yes, your credit should boost up, depending on what is on your credit score. So the other thing too is, another myth is people say, well, I had credit card trouble, so I'm just going to delete that account. Again, that's going to fall back to, if you delete it, it's not going to get deleted for at least 7 to 10 years. It's always best to pay that credit card to zero and then just cut it up and leave it because you got credit utilization. Again, we can go days and days and days on credit, but these are just some quick myths and facts that you should be paying attention to that we hear every single day. I hope this helps. Look forward to talking to you. All my links are down below. Look forward to talking to you and working to you soon.